The new GST reforms are here and they're shaking things up.
GST 2.0 is here.
GST 2.0.
India's GST reform.
These reforms have been carried out with a focus on the common man.
From popcorn to insurance, these changes affect what you and I pay every day. Joining us today is Ajay Rotti, tax lawyer and founder of Tax Compaas, to explain what's really changed and how it impacts the common man.
GST slowly, in my view, is moving from what used to be a politically compromised creation to more economically rational thing today. And what has happened on third is one of the early steps moving it decisively towards that.
I think not a lot of people appreciate how massive a consensus building exercise this whole GST reform was.
So you had this classic case of a particular set of popcorn going into 5% and something going to 18% because it had sugar.
Hey Ajay, welcome to Bharat Varta. Thank you so much for sparing time for this. I understand you have a very busy schedule.
Thank you so much.
Super thrilled that you're here. A lot to unpack in this episode of Bharat Varta, where we'll talk about the GST 2.0 reforms. We'll discuss the highlights, of course, but we'll also talk about some nuances in terms of why certain things were decided, and also back up and talk about the history of GST itself and its impact. So let's start with a few highlights. What do you think are the broad takeaways from GST 2.0?
Firstly, it is GST 2.0. A lot of the times these kind of changes get hyped up with 2.0, 3.0, etc. Here, this is really a different version, if I can say that, and a much improved one. The primary reason being the rate rationalization, which is the number of rates that will be there going forward from September 22nd, which is practically 18 being the rate for most things, and with two exceptions, 5 for essentials, 5%, and then 40% for what will be luxuriance in goods, which is, in my view, an ideal structure.
Right.
And therefore, that is the highlight. That's the biggest change, which should reduce, classification disputes, simplify the overall structure of how GST is.
Right.
So that's the highlight.
Right. So will we have less outrage about popcorn, buttered or caramelized or something else?
Yes, there will be less outrage. That's something that's there in most indirect taxes which are based on goods. Indirect taxes are taxes on goods or services. And the moment you want to have different rate for different goods, and there's a reason why you would want to do that, you'll have to classify all goods. You can't practically catalog all the things that exist.
Correct.
Therefore, you use a code that exists and you try to fit the goods that come in. Caramel popcorn, whoever thought that caramel will be added to popcorn, and that's where you ended up with that. And it became a sugar confectionery rather than popcorn. Those will reduce,
right.
On a serious note. And the reason it will reduce, Roshan, is because most of essential food goods have been brought into 5. Earlier you had something at 18, something at 5, something at 12. Therefore, classification became important as to which item it gets classified into. So you had this classic case of a particular set of popcorn going into 5% and something going to 18% because it had sugar. Today, all of those food items, the entire classification is at 5%.
Right.
So whether I call it caramel popcorn, popcorn with sugar, popcorn, whatever I call it, it becomes 5%. Therefore, those disputes will go down. In the press conference, the Revenue Secretary mentioned that a lot of these classification disputes don't even yield them much revenue. It just takes away time for both the taxpayer and the revenue. So yes, those will go away. I think that's a big change.
Yeah.
That will be there.
No, wearing the policymaker hat, right? I mean, it's such a difficult problem to solve when you're, issuing guidelines, policies for India scale and complexity. There are always going to be such disputes at the margin. You mentioned the case of Nestle and KitKat as well, right? That they had something similar.
So in Nestle, KitKat was a very interesting years back. Simple question: all of us go pick up a KitKat and eat. Is KitKat a wafer with a chocolate coating on top of it, or is it a chocolate with a wafer inside it? Because if you classify it as a wafer, the rate was different, and if you classify it as a chocolate, the rate was different.
This was in the UK.
here in
Oh,
India.
here. Okay.
UK was, again with a particular variety of cake, whether it's a cake or a biscuit.
Right.
It's been there in a lot of places.
Right.
You would have heard the jingle while growing up of Vico.
Yeah, Vico Vajradhanti.
Vico or even the cream to say that nahi cosmetic ye hai, Ayurvedic cream or whatever. The reason was cosmetics were at a different rate and Ayurvedic preparations were at a different rate.
Right.
So they also positioned it to say it's an Ayurvedic preparation and not a cosmetic.
Right.
So classifications disputes have been there for long, and there is a reason there because business products are filled with innovation. You get newer products, and therefore the tax laws have to catch up with that.
Yeah.
They won't anticipate it.
Yeah.
Taking a little more technical and more complex product, softwares when they were written, we had the law which said that a software on a media drive, magnetic drive, etc. Therefore, you put it on a CD, you put it on a pen drive, and you sell software. Earlier, if you remember, we used to get into those shrink wrap boxes. You put the CD and use a code and load the software, etc. Then we moved into online downloading. Then you moved into cloud. Now, how does a law capture sale of software?
Yeah.
If it said on a media disk, you will today say, I'm not selling it on a media disk, therefore not taxable.
Yeah.
So tax laws by their nature have to be dynamic.
Yeah.
There will be times where there will be those gaps.
Right.
And that will have to be get filled. Like you rightly said, the policymaker's job is difficult.
Yeah.
Because you are then chasing that.
Right.
And the businesses evolve, new delivery models come, new products come.
Right.
And all of those have to be brought in.
Yeah. Policy always lags innovation, right? I mean, and that's rightly so, because, if you try to get too adventurous on the policy side and try to, think too far ahead, I mean, you can have a situation like in Europe, for example, right? Where arguably you can say that the policymakers are just thinking through all of the 100 nuances even before there's been some development or innovation in tech specifically. But what was the rationale behind the slabs itself? Why did we have these slabs in the first place?
That's a very interesting question because, again, you have always policymakers have a choice to keep the tax law simple. The simplest thing could have been to say put one rate and do it. Today, for example, if you look at UAE has VAT and it's 5%, whatever is the goods, whatever is the service. There are no classification, there's no different rates, etc. But that works for that market. For our market, I don't know if we can have a single rate, and we'll get to that in a bit as to why not. But your question on why did we end up with where the rates that we had, which is 5, 12, 18, 28, is because why did GST come in? And in what context did it come in? GST was, a tax which replaced a bunch of taxes. A lot of the other taxes got subsumed into it. There was excise duty, there was entertainment tax, there was octroi, there was sales tax. After sales tax, there was VAT, a lot of these. All of them on goods and services. And then there was service tax. Services were with the domain of the central government. Goods were always with the state government. So therefore, we had state VAT or state sales tax, but the service tax was center. Now, when you merge the two and you wanted to make it goods and services tax, and then we had a tax called excise duty, which was on manufacture. So anybody who manufactured anything, it could be this glass, it could be this table, it could be the mic, any of the things. You manufacture a product, you have an excise duty. Then when you sell the product, you have a sales tax or a VAT. Now they merged all of it to create one tax. So dozen odd taxes went in, some of which were with the state government, some of which were with the central government. So the states were giving up their right to tax goods, for example. Therefore, the states had to get something, which is why we have a dual structured GST where some of it goes to the state, some with the center, and the center then sends more to the states. Now, when this happened, we had varying rates across states, across products. So tumbler like this could have had 10% in some state, 5% in some state, 8% in some state.
Which defeats the original point anyway.
Yes. So you had different rates. Now, how did the states come on to the table and agree that we will give up this right? What the center told them was that we will compensate you for whatever revenue you will lose based on a certain base year. We take this as a base year. You're giving up your state VAT, etc. We are bringing in GST. You will collect some part of the GST directly. And some we will compensate you if you lose. Now, when the center was agreeing to compensate them on the losses, they couldn't have changed the rate. If a particular item was at 12%, you couldn't have taxed it at 5%, then somebody had to bear that. So therefore, to get to a point where nobody loses too much and there is less loss of what revenue was being collected, they moved into these many rates.
Right.
So some state could have had some goods at 3%, 6%, 4%, etc. So they said whatever is 3 to 8 or 9 will come into 5%, 11 to about 13, 14 will go into the 12% bracket,
right,
and then rest of it 18 and some at 28.
Right.
We need not have had these many if we were starting with a clean slate. And nothing in India is easy and simple with our size, scale, and the number of states that were at play.
Right.
So we came up with these 4 rates. That complexity, in my view, was a result of a political compromise. Because you had to get the states to agree, we had to somewhere start.
Yeah.
And GST has had multiple benefits.
Right.
Forget just the rate, and we will get through with this conversation on the rates. Therefore, we had to start somewhere. And we started with these 4. And Mr. Arun Jaitley at that point itself had mentioned that these 4 rates are starting because of these many rates that are there. Once revenue stabilizes and the compensation that we've promised you ends, which was a 5-year period, we will relook at the rates. And then we will try to see if we can get to fewer rates. So this is something that was planned. Today, what has happened, in my view, is a natural course correction. It's not something that's happened because of tariff or any of those things.
Or because of Twitter outrage.
Definitely not because of Twitter outrage. So a lot of Twitter wants to believe it is because of that. It is really something that was planned as a progression.
Right.
Now, 2021, they set up a group of ministers to look at rate rationalization. Those reports came a few months back. They said we can merge it into 3 rates. So today, one, state's compensation is stopped. Second, the states today know what their revenue is, where they are getting, and GST has stabilized. GST has brought in a lot of undocumented transactions which were outside the net into the net. Base has expanded, collections have improved. Therefore, today we have the ability to reduce the tax rates. Earlier, they couldn't have taken everything at 10%. It would have had an impact on inflation. They couldn't have taken everything to 0% because it was essential, because it would have then meant lower revenue collections and somebody had to compensate. So today we have all those in place. So moving all essentials to 5%, some at 18% is possible today.
Right.
That is really the reason why it's happened now. And this is the natural progression. We started somewhere, which was an imperfect start. It had to be because we started, and we are correcting it as we move along.
Right. I think not a lot of people appreciate how massive a consensus building exercise this whole GST reform was, right, in the beginning.
Yes.
Considering also, the GST Council comprises 2/3 of the states.
Yes.
Right. And how many permutations and combinations, as you mentioned, are there of all of these categories of products?
Correct.
Both goods and services. So really kudos to the political sort of maneuvering of the government to sort of see this through, right?
Yes, and you're absolutely right. So 2/3 votes is with the state and 1/3 with the center. And what has happened, Roshan, from the time we've started, as a tradition, the GST Council has been taking decisions on an unanimous basis.
Why don't we just
voting.
back up a little bit and talk about the GST Council, because I think,
So GST Council is a body that was created to say, now once you merged all of this, and who decides the rates for the goods, etc., can center sort of unilaterally change the rates, which impacts the state. So they came up with this concept, and this is a part of the constitution, and the constitutional amendment happened for GST, to say that the rate fixing, classification, what should be the different slabs, etc., will all be decided by the GST Council, not by the Union Finance Minister, not by any single government.
Right.
They said it will be the council. The council comprises of all the states and the center. And states nominate their ministers, mostly finance ministers. Some states have other ministers. The Union Finance Minister is the chairperson. And the center has 1/3 votes. And the rest of the 2/3 is divided amongst the states.
right.
So the whole thing was to say that this will be a joint decision-making body. And today, all decisions of rate change, everything is by the GST Council. Which is why, when the Prime Minister announced that there will be GST reforms, change to the rate, and there'll be benefit to the common man. That's all he could say in the Independence Day speech. The actual decision of what will be the rates, which goods where, has to be taken by the GST Council.
Right.
Which happened on the 3rd.
Right.
So the council, from the time it has started, has not gone into voting. Because they have said it will be a tradition that we will sort of work together, get unanimous consensus decision, hear each other out, make the changes needed, etc. And even this time they have not voted. There are a group of ministers who sit on key decisions. They decide, present it to the council takes the decision. Most of the council meeting minutes are publicly available. You can know which state said what and what was discussed on each of the agenda item. So the council decides all of the things on GST. In my view, GST and the way decisions are taken is probably a great example of how the federal structure of our country is to work.
Absolutely.
The states and the center sit together and they decide what's good, and both of them have skin in the game, so to use that phrase. And all those decisions have been like that. So whether it is whoever may be the ruling state now, as take our state for example, as long as BJP was ruling Karnataka, the BJP minister used to be sitting on the council. Then it's right now it's Mr. Krishna Bairegowda, revenue minister, who sits on or attends the council meetings. And if you see the minutes, if you see how decisions have been taken, including the current one, it's always been together by consensus. This time meeting, they had 2 days blocked, but they finished everything in the first day and then announced that these were the decisions.
Right. So truly sabka saath, sabka vikas in that sense. Yeah. Public memory is fairly short, right? People don't remember a time before GST, or rather they've wiped it clean. You've been in taxation for,
Yes,
quite long,
time.
right? Why don't you help us appreciate some of these nuances, right? So let's say, you were sending something from Punjab to Tamil Nadu back in the day, and it was passing through all these different states. Pre-GST, what was the situation like?
So what used to happen is, pre-GST, each state had a tax. Therefore, your goods originating from a particular state, destined for a particular state, the taxes used to be different, and it used to get collected there, and it used to pass through the states. Where it was passing through a state, there was no tax, and therefore they used to check it. So if a particular truck had to leave Bangalore and go to Delhi and had to pass through 7 states, then it literally had to go through those 7 or 12 checkpoints by entry, exit, and so on. Without getting into too much technical details, and won't bore you with the nuance thing, but there are enough reports to show that logistics, both the cost and the time, has come down significantly after GST. The number of kilometers that a truck covers to the number of days certain transits, like say Kerala to Delhi or Bangalore to Guwahati, used to take, has significantly come down. You would remember when we were driving, in the old days before GST, you would see long trucks at the checkpost. You remember the Hosur checkpost, which is today a deserted place. There's nothing there. Sales tax post, which used to have a queue of trucks for about 5-10 kilometers, and each of them had to carry those papers, physical papers, get it checked. What is the goods? There's a person inspecting. So one part is the logistics, which has improved. The second, and something that not many people discuss, and this is more because it was a very operational thing from a tax perspective, is large companies which had presence in 20-30 states and doing businesses in all of those had VAT registrations, assume in 25 states. They had to file returns in 25 places, which happens even today. If 25 places there are GST returns have to be filed, they have to file. But it's the same format of the return. So your data collation, how you do, what you file is all standardized. You had 25 VAT returns, each of them were different. And I've been through those days. There would be states with 1 page, states with 2 page, states which ask for certain information, states which don't. Rates were different, classification were different. Certain goods were at different rates in one state, different rate in another state. You deal with different tax officers. Some of the states were doing their local VAT assessment in local languages. I have seen notices in Kannada. And it was literally working with 20 different countries and 20 different laws. All of that has come into one.
Right.
Is there administrative difficulty even today? Yes. A company which has 20 state registrations will file 20 into 2 returns every month. will deal with 20 different officers. Yes, but is it an improvement over the pre-GST days? Without a doubt.
Right.
The absolute inconsistency in law, inconsistency in classification, in formats, in returns, everything is gone because today it's one. And truly one country, one tax in that sense.
Right. We started off with some highlights of GST 2.0. Right. You want to talk about some of these categories? What are the significant changes that have happened? Like let's say consumer durables or
Right.
appliances, insurance, and so on.
So I'll cover some of the key ones which are there because there are too many.
We'll
And
highlight
if you
the rest on the screen.
If you actually see the number of goods which are there in the press release, it runs into 80 pages. So the key ones, most stuff that you and I would consume on a daily basis is at 5%.
Yeah.
Look at biscuits,
Soaps,
look at
shampoos.
soap, shampoo. All of that is 5%. All of the services, mostly services are at 18.
Right.
Except for some of them which are being brought down, like hairdressing, saloon. A lot of those have been reduced. Earlier they were at 18%. So whatever is needed for the real middle class and the common man has got reduced to 5%. That sort of can almost be a thumb rule to say that it will be 5. Now,
The interesting thing was footwear for me.
so footwear, I'll tell you, I have my views on that as to why it has to be that. There is a differentiation that they have drawn up at 2,500 rupees. Below 2,500 is 5%, and above 2,500, 2,500 is a different rate, 18%. I think we are at this point, our income levels, the disparity in income, the inequality doesn't permit us to have a single rate.
Right.
Because if you want to have a single rate, it should be 5, right? Because it has to be affordable for everybody.
For everyone, yeah.
Why would you and I buy a 20,000 rupee shoe and pay 5% tax? It can't be that regressive. Therefore, some places, if you're making it 5%, you need to recover revenue somewhere. The key for that is really what our mix of the taxation is. Ideally, we should have been collecting a lot more taxes from personal taxes. Our rate, most people will say, is high.
You're saying something very unpopular, Ajay.
Yes, it is.
You're going to get trolled for this.
So I'll tell you, our personal tax rates are high. But our personal tax collection is not high as a total percentage.
Right. The tax base is still small.
It's still small. So once that expands, then we can afford to give up some indirect tax collections. Today, GST still contributes a lot of taxes. The reason is simple. It's easy to collect.
Yes.
You and I don't need to file a return, which is what has to be done in income tax. We have to admit an income. So a small trader will have to admit income. People who are in gig economy, etc., have to file income tax return and admit them. Whereas in indirect taxes, you go and buy something, you have to pay tax.
It's baked into the transaction.
It's baked into the transaction. And the collection is by the person who's selling.
Yes.
Therefore, it's very easy to administer and collect. So, and there's less chance to avoid and there's less leakage.
You want some water? Sure.
Less leakage. Therefore, we're still collecting a lot from indirect taxes. So even revenue and gathering revenue is still important. So going back to the footwear, and that's where we sort of segued into this, which is important, is we couldn't have got all footwear down to 5%. We would have lost revenue.
Right.
So somewhere you have to collect. Therefore, they've drawn that. Same thing with cars.
Yeah.
Why would somebody buying a 1 crore rupee, car, pay a Lexus or whatever, pay 18% GST?
It's 28, right?
Yeah, it's 28. Now it's 40.
Okay.
If it's a large car, it's 40. And why would you differentiate? Two-wheelers are 18%, and even within two-wheelers, they have gotten this more than 350cc, etc. That's the reason for some of those. Now, the critics can come back to say there's still this differentiation within the same goods, etc., which I think at this point is needed given our revenue imperatives.
Right.
And given where we are. 10, 12 years, all goes well. We are a rich country. Our per capita income has gone up. We don't really rely so much on indirect tax collection. All of this could go away. We could even have a single rate. But not today. And that's the reason that footwear difference, in my view, is important. And you cannot have the same rate for two different categories of footwear. And now, again, we can debate till the cows come home as to whether it has to be 2,500, 1,500, 5,000. It's where it is.
Right. What do you think about cements?
Cement and few of the other construction things, they've reduced the rate. That we should see the benefit being passed on.
Right. So you're going to
homes,
see
etc.
it's per construction, housing, real estate, and all of those things?
It should.
Right.
There should be some benefit on the price that will get passed on.
Right. Right.
Therefore, basic simple economics, if the price drops, there should be more demand, and therefore, even on normal goods, whether it's on construction because of cement, etc., there should be some more expansion of the base demand, and the market should grow in most of these cases.
Right. The other big thing is the exemption for insurance, right?
Right.
And again, there's a so the good thing is that obviously the government wants people to invest in insurance, right? But also, the insurance companies feel like they're not going to get some of that input credit on their marketing spend, so-called marketing spend, and so on, right? So what do you make of that?
So I'll tell you what happens there, and get a little technical. Let me see how simple I can put it. Is GST is you get the credit for input, and it is a tax that you pay only on the value add. So you buy something for 100 rupees, you're paid 18 rupees GST. You add value, you sell it at 150 rupees, and you charge 18% of 150. And I'm checking just an example of 18. Then whatever input you're paid on 100, you can deduct and pay only the difference into the GST. That's the change that will be there. Now, what happens in a case where your output is exempt, which is what is happening now, or which will happen going forward on health insurance. The insurance companies were earlier, say, charging 1,000 rupees premium, on which there was a 180 rupees GST. They were billing you and me 1,180. They were collecting 180 from us. They had certain inputs on their rent, on reinsurance, on marketing spend, like you said, commissions that they used to pay for distribution, etc. They would reduce that. So therefore, in the cost that they incurred, the GST would come back. It was not a cost. Today, what happens is their output is zero. So they will only charge you and me, say, 1,000 rupees on the premium. Then whatever is the GST that they have paid on inputs suddenly becomes a cost. Therefore, what they are saying is that 18% reduction may not be a full reduction for me. Whatever becomes my cost, because I'm not able to unlock the credit,
I'm going to pass it on to the consumer.
That's all. So, my view, you could have a situation where instead of 1,180 in our example, you could have 1,050 or whatever, 1,100 or something, 2%, 3%. So therefore, the reduction being 12, 13, 14. It depends on the cost structure of the insurer. Right. Some of the insurers, without getting into names, have been on record to say that we want to pass on full benefits. And we will bear the cost of the input loss that is there. That's completely a decision left to them. But what they cannot do, as per the law, is continue to charge that 18%.
Right.
So the law, the anti-profiteering law, the technical term for it, clearly says if any business gets a benefit out of a reduction in GST rate or because of input tax rules changing, then there has to be a commensurate adjustment in the price to the customer. So simple, forget the input tax credit loss, etc. Some goods was taxable at 10%. They were charging you the 10%, GST becomes zero. The price has to be without GST. They cannot profit from it by keeping the same price.
Right.
So therefore, they cannot keep it beyond their input credit loss. They may take it back to zero. To say, I will pass on the entire 18% to the customer, and I will bear some of the losses.
Right.
We'll have to wait and see what will happen.
Right.
Some of these are things that you will see in the next 8-10 days. This is what will keep people like us busy working with businesses as to where you have to price that.
Right.
While the 22nd September is a nice fit into Navratri, etc., but it's also given the industry a lead time to plan some of these transitional changes, price changes, rate changes, etc.
Yeah. No, there are those who believe that insurance should have always been exempt from GST, right? It's just a moral, ethical thing. And good for the government to promote folks who are thinking prudently about, their life and spend and so on and so forth. And what we've also seen is a misuse of this whole input credit scheme, right? Which is a bunch of the insurers are under scrutiny right now. I mean, for those who are on X, just follow Monica Halan. She's been tweeting about this, posting about this this stuff, right, about the insurers. So it's I don't know. I mean, there are both sides to it, I feel.
Yeah.
Right. And these things are so complex as they are usually.
See, input credit, how it works, what is a real thing, is dependent on a lot of businesses. Nothing. And a lot of companies are under scrutiny. That's a complex mechanism, how you will read it. And the department often checks whether input credits are taken right way or not. But as a principle, the GST framework is to ensure that the credit moves in a chain and doesn't break anywhere.
Yeah.
The moment there is a zero supply, there's a supply which is exempt, the chain breaks and then the credit goes away from there.
So the focus of these reforms, clearly, from the bunch of tax slabs that have been rationalized and so on, seems to be to help the middle class, right? And again, we're not talking about the ex-middle class, which thinks it is middle class, but the real middle class, right? I mean, and pass on benefits to them. And that's also been like a constant crib of people, right? That this government is not helping the middle class economically as much as it should. So do you think that this is going to help the middle class, as it was intended? Or was
I think it will.
Intended?
It was intended,
right.
And I think it will help. And you've drawn out a absolutely important distinction and point. It's a real middle class, not the middle class on X. So it will help the real middle class because there'll be more money left with the lesser rate. A lot of it, if you see the thank you advertisement that's put out by Amul, leave out the politicization of that. It's really most of the dairy products have gone out of tax net now, of GST.
Yeah.
Whether it's for Amul, whether it's for Nandini, it can be for anybody. Yeah. But the fact of the matter is, all of those everyday use things are out. So if today your grocery bills are down by 5, 10, whatever percentage, it's a big saving.
Adds up.
And then you also have the insurance. You need to remember we are not a country which has universal healthcare, social security at the level that the West has. So all of us, if we have to have health insurance, we buy it. Therefore, there's that saving. For people who that saving matters, it makes a big difference. It's more money in the hands. For people for whom that 18% may not matter, you can always extend the cover. One way or the other, it really benefits.
Right.
And I think a lot of the changes that have been announced will benefit the middle class without a doubt. And the other sector that, according to me, will also get benefited is the MSMEs, if you look at the business side.
Yeah. No, that's, again, reducing the cost of doing business has been one of those focus areas, right? And something that the government has been panned for also quite a bit. So this, obviously, fewer slabs is going to mean lesser paperwork, hopefully simpler.
It will be.
Much less work for you?
Yes, less work for me. And in any case, we don't enjoy doing that kind of work where it's because of litigation and those kind of things. It will simplify a lot of things. Like I said a while earlier, the classification disputes coming down is definitely going to happen. The number of goods which go into different rates have reduced. I personally have been quite pleasantly surprised with the amount of rationalization and wide sweeping moves to bring it into these 3 rates that has happened.
Right.
If you had asked me a week back or week before the GST Council meeting and announcement, I would not have expected it to come down to as simple as it has become today.
Right. But if you look at sin goods or luxury items, they've been taxed at 40%, right? Of course, I mean, the government wants to discourage spending on those things. But is there like a strategic view on this? I mean, any other intent as such?
I don't think so. On sin goods, if we classify largely into 3-4 buckets. One is what the government believes, and even I believe, I'm sure you will also believe, which is unhealthy food consumption, aerated drinks, sugared beverages,
alcohol, and so on.
Alcohol is out of GST.
Okay.
So aerated drinks and those things. That's one category. Second is the pan masala tobacco products, which there's no doubt about. The third is really what is called the luxury goods, which is, cars and bikes above 350cc and things like that. Now, the first two are clearly to discourage consumption. Not just now, right from the early meetings of the GST Council, it's always been that some of these have to be at a high rate. What is interesting is people are only looking at the headline to say that aerated drinks and some of these sin goods have gone to 40% from 28. But they were always at 40. Because we had a 28% GST and a 12% cess. You take a Coke, Pepsi, whatever. They were 28% GST plus a 12% cess, which means 40%. So you have now made it 40% one single GST. So there's no change in tax rate. So to that extent, the policy is consistent.
Can you explain cess here, right? The significance of that.
So
why that structure?
So the cess, going back to the first point on the compensation that the states had to get. So on top of the actual GST rates, the government started collecting this cess, which it used for compensation to the states, and they were borrowing related to that compensation. That's why cess was being collected. That has to be phased out. That's lived its life because compensation is over. So they anyway had to take out the cess. Therefore, they have moved it to this 40%, which now there's no cess. It's a 40% GST. If you buy Pepsi today, you're still paying 40% GST. That's being split into 28% GST and 12% compensation cess, which is coming to 40. So there's no change in either the rate or the policy on what's called the sin goods.
Right.
On luxury cars, some of them were actually higher than 40. So there was a cess at the highest level for expensive cars at 22%. So you had 28 plus 22, which was 50. The lowest of the entry, the luxury segment that they had, over 1200cc for petrol, over 1500cc for diesel, was at 28% plus 15%, which was 43%.
I'll have to, 1 second. So when you say like a 12% cess or a 15% cess, I mean the center is compensating for this to the state.
Correct.
Right? It's not passed on to the consumer. The consumer pays the 28%.
Plus the 12%. The consumer pays both.
Okay.
So you and I today, if we go here and now walk in and buy a car.
Oh, got it. So it's actually 40%, but the center reimburses that 12% to the state.
That center uses that to reimburse the state.
Okay.
Come 22nd September, they will start collecting 40%.
Collecting all of it. Okay.
Now, if it is a state, 50% goes to the state, 50% to the center, but now it will become that one thing.
Right.
So some of the cars have will effectively come down after 22nd September. Because today they are at 50% effective tax rate, they'll be at 40. They're at 43, they'll become 40.
Got it.
So when we talk of these luxury goods, sin goods, on sin goods, the rate has not gone up. It is where it is. It's now become GST. That has been the stated objective of the council for a while now. To say that whatever is unhealthy, what has not to be consumed, where they want to discourage consumption, it will be at 40%.
Right.
So that stays where it is. And they have created that 40% for that.
Right. Alcohol and fuel are still exempt from GST.
They are out of GST.
And these are still at the discretion of the state. Right. So
there's
there's
good question. There's one fine distinction between the two, and I'll answer it. The holdout is because a lot of the states depend on excise or the taxes on alcohol for their revenue.
Right.
So when the whole political compromise that we spoke of earlier to start and implement GST was there, the center said we'll keep alcohol out. You continue to collect taxes, you as in the states, and therefore we will get started with GST. Alcohol for human consumption was kept out. So even today it's a state subject. Each state collects different taxes. It's out of GST.
Right.
Fuel, which is petrol and diesel, and even ATF, which is the fuel for aircrafts, is within the GST ambit, technically, as per the constitution. But the GST council can decide when they will start GST on it. They have temporarily left it, so it is with the states, which is really why petrol, we have different rates in different states.
Yeah.
The fuel tax, Karnataka today, everything on petrol goes to the Karnataka state government. the state collects sales tax on that. So alcohol and fuel is kept out. There's been an ask, for example, by the airline companies to bring aircraft fuel into GST because they are losing credit. Because today what they are paying on the aircraft fuel, they are not getting credit. Once it comes into GST, they'll be able to use that credit against their output, which is sales of ticket is liable to GST. So they've been asking, eventually, according to me, fuel has to be brought in. But that's more a political thing than economics at this point. Because if you purely go by economics, everything has to be in GST.
Right.
Given, I keep going back to this phrase, a political compromise, it still is out. GST slowly, in my view, is moving from what used to be a politically compromised creation to more economically rational thing today.
Right.
And what has happened on third is one of the early steps moving it decisively towards that, moving away from what was created because of a political compromise. Once fuel comes out, once liquor, alcohol comes out and comes into GST, we will have completed the journey.
Right. How are the states reacting to this? Considering also that the cess and the compensation is going to end shortly, right? So what are the early signs?
So the states knew this. This has not come as a surprise.
Also because they comprise of the GST Council as
Correct.
well.
And this was stated at the beginning itself that the compensation used to be only for a limited period. Some of the states have done right to increase consumption, increase their economic activity to start, because when any sale or supply happens within a state, 50% of the GST goes to the state. They don't even need to rely on the center. So some of the states have done the right thing to increase their GST collections, etc. Now, it is also the responsibility of the states to increase economic activity, promote businesses, get more investments in, to ensure there is more GST collection. The center can't forever underwrite how much will come. There will be some political noises to say that, we've already heard from a couple of states that this is going to result in a loss for the state. It will make it fiscally unsustainable and things like that. Today, the states have to be responsible for their revenue, in my personal view. If everything keeps coming as a passed on from the center, then they will keep recklessly spending it on schemes and things like that. I think overall on balance, states will find their way. I personally am not a supporter of any government supporting some other government forever with underwriting, leave whether it is center versus state, etc.
Right.
I think there's enough time for transition during which there was support and compensation given that states knew it would end, and it has ended. Now, this change, will it mean a little bit of drop in revenue for states? Yes. It will also mean drop in revenue for the center. They need to plan it.
It's easier to make a law or a policy than to repeal it, right? I mean, it's super difficult. So how will this impact collections? And recently we've seen this phenomena of welfareism, freebies, and so on and so forth, right? One could argue that by taking a hit on the finances, right? I mean, this is a form of welfareism. This is a form of politicking in some sense, right? How would you draw that distinction? And should we be worried about our deficit and so on?
I don't think so. These are again numbers which are estimates. Of course, intelligent workings backed, not numbers pulled out of thin air. The Revenue Secretary indicated a number of 48,000 crores to be the fiscal impact. Now, this 48,000 crores, Roshan, is based on consumption of 23-24.
Should be much higher, right?
Yes. So now, how do you compute that? You took a 23-24 number to say that these basket of goods were at 50 or 12%, they move to 5. These baskets move to 18, and therefore, what should be the impact? First, you don't know what the consumption in this year is. So therefore, what is that number going to be? Second, once the price reduces and there's more money in the hands of the consumer, they're going to buy something. And you need to remember, at lower levels of income, they spend most of what is earned. The savings is not very high. Every consumption leads to a GST. So today, if somebody was spending 10,000 rupees on grocery. And that becomes 9,000 because of a reduction. The 1,000 rupees will be gone. You will go and spend it on a garment, something else, watch movies or whatever discretionary.
Yeah.
That will collect GST again.
Right.
Therefore, a portion of what you have foregone, if I use that word, will come back. So therefore, it's a complex math to see what will be the actual impact. I don't think we will be able to today guess what will be the exact revenue impact of these changes. Because you don't know where somebody will go and spend that money, how much of that will come back, and what will be the expansion of the market and what's the new demand that will get created because of this additional money. We will have to see as we move along this year as to what's the impact on business, what's the impact on GDP, what's the impact on market activities that has happened, to know how has this GST change played out. That's one way of looking at it. The way I see it is, I don't think these changes were more to say because of the revenue thing. If you're simplifying a law to say that from these many rates I'm bringing it to 3, then if there's a cost of that simplification, there's a cost of that simplification.
Yeah.
So whether I would lose money or not, I have to simplify this. If I was driven purely by the revenue loss, then I wouldn't have done this. I would not have reduced the rates to 5%, or probably taken it up to, I would have said let 12 remain 12. Or I will simplify it by taking out the 5% slab and keep everything at 12. So therefore, to my mind, beyond a point, what is the revenue implication? And I don't even agree with the word revenue loss. I don't think there is, in that sense, a loss, because this is a reform that was to be done in my view.
Right. So it's going to reflect in GDP for sure.
It's going to reflect in tax collections and GDP, yes, because if there's expansion in activity, more consumption is
anyway.
Absolutely.
Right. This is one of those broad-based structural reforms, you can say,
Yes.
and by no means the last of it, right? So what can we expect, or rather, what is your wish list? What are some 2 or 3 things that we should follow this up with to have like a real, truly tangible impact on the economy? So
I think we have corrected one of the things. There are quite a few things that the GST law needs a correction. And of course, we never implemented a perfect law, and therefore we had to correct. One is the rate rationalization. But I think there's a lot more work to be done on administration. A lot more work to be done on tax litigation. Those are 2 things which are impacting business.
When you say administration, do you mean like Babudam or?
Yes. So I'll tell you, when I say administration, today you go talk to a businessman and somebody who's dealing with GST on a daily basis. His or her problem is not about 5%, 12%, 18%. I have 3 categories rate. That's not their problem. That systems take care, that there's a process to take care. Their problem is I file 20 plus returns a month, for example. And if I'm operating in 10 states, today 10 officers can ask me questions from each state. And I'm personally involved in matters where on the same transaction, same kind of things, 2 different states are taking 2 different views. Because the 2 different state officers are dealing with that. There's a notice on the same thing from a tax officer in Tamil Nadu, one from Gujarat and one from Karnataka and one in Uttar Pradesh, for example. There is no consistency in how they are approaching that. It's the same business, same company, same transactions. Now, that is one thing which has to be addressed. Because it's one tax, one country, yes, but today because we have a dual structure, the state officers are different. Now, this is more acute for services companies, say banks, telecom companies, software companies, other services companies, anybody for that matter who's rendering services. During the service tax regime, which was applicable on them, it was central levy, one registration, one tax. And they used to deal with one officer, the service tax officer. Today, and they would get assessed in one place because they were registered in one place. Today, they are having 20 registration in 20 different states for the same services. There are 20 officers, 20 returns, 20 assessments that are going on. This needs some bit of immediate address. Now, rate rationalization was key. That's been done. Once that is behind, that's not the end of the thing. The GST has not become absolutely perfect and, it's reached its ideal state. It's not. there are things to be done. One of the things is this whole administration bit that has to
On
be
that
changed.
bit, right? I mean, see, you've seen this for the last 20 plus years. This attitude of sub businessman chor hai, is that still latent in the system, the machinery, the people in power?
It is. It is. I've been dealing with the tax officers for 23 years now. That attitude remains. And I think the reason for that is a trust deficit on both sides. One, the officers don't trust you. And they believe that, you are there to not disclose the right facts and things. Second, you also don't trust the officer to say, somebody is doing this more for extracting something out of me and rent-seeking behavior, etc. And it's a function of variety of things. It's a function of corruption, which has been there for a long time. It's also a function of low compliance from the taxpayer's side. Because as taxpayers, our record has not been stellar as a group. There are, you were a while back talking about misuse of input tax credit. There have been multiple stories like that. Therefore, the tax officers also today view you with a sense of suspicion, because the general thing has been, you and I both know multiple years back where we used to say, give this without bill, there'll be no VAT.
Yeah.
And if I pay in cash, there'll be no tax. All of those are a function of things which are not recorded into the transaction.
Right.
Today, if things move to 5%, all of that will go away, because people will not mind paying that 5% and lower the tax, they'll pay it, and more transactions will come into the system. So this whole thing of taxpayer, tax officer thing is a trust deficit on both sides. Right. I wouldn't blame one side for it. There is both sides. There is definitely a need to address that. That is a pain point. And unfortunately, in the current set of things, there's nothing done on that. I think that is required on a war footing. The second and equally important is the whole thing on litigation. So litigation is like a second step. After you're done with the officer, he or she has concluded that this is how much you have to pay and you don't agree, and then you litigate. We didn't have the GST tribunal in place until now. The GST council meeting, which concluded on 3rd, they've announced that they will start admitting appeals. They'll start hearing before December, etc. There's a lot of bottled up case. So many years from 17, we've had GST. There have been a lot of orders. That clearing that backlog, litigation today takes forever. Nothing to do only with GST. It's a tax issue, whether it is with income tax, corporate taxes, GST, all of it. That's another bit that needs to be addressed. So is there scope for reforms? 100%. Is rate rationalization, that exercise that's been done, the final stop? Nowhere. It is just a start. It's a good start to take it towards an ideal state, but there's a lot more work to be done.
Right. So I have a couple of questions from social media. Vivek, who runs a pharma business, asks, how would the transition happen in terms of stocks already in the supply chain, which would take, let's say, 2 to 6 months to get liquidated?
So there will be some transitional issues there. The CBIC will come out with certain clarifications. We'll have to just wait and see over the next few days as to how that will play out. Not just pharma is one classic example. The other example that I was discussing just earlier today is stationery, for example. You bought stationery has suddenly become zero on GST on most cases. So what happens if you bought stock last month, this month, keeping it, you paid GST on it? What happens to the GST that you paid? Because if GST was there on output, you would have used that and set it off. What happens? Will you get a refund? Will you have to reverse it? You have to bear the cost. Even on other things like cars. Dealers bought sitting with cars on which compensation cess has been paid. But when the dealer sells the car after 20 seconds, there's no compensation cess. It's a 40% GST. What happens to that? I think there will be some clarifications issued on all these transitional issues. We will have to wait and see. We will have to...
Not a very enviable task.
Definitely not. But then, all of these they come with a rate reduction.
Yeah.
So we have to deal with it.
If a restaurant changes its menu, I mean, they're going to have some short-term problems, right? I mean, they're going to take a hit for sure. At India's size, scale, and complexity, I mean, doing even the most minute things is going to impute some kind of cost in the transition.
Completely agree.
We have another question from Govind. He says, after income tax and GST rate rationalization, how does the life of a middle-class person earning 1 to 1.25 lakhs per month look like? Is India the best destination for middle-class life now in the developing world in terms of tax outflow?
Very difficult to answer. Very subjective one. I could make another unpopular comment to say 1.5 lakhs a month is not is Twitter middle class. But extremely difficult question because it depends on a lot of things. How much you save, what you do depends on your spending pattern.
Right.
You're somebody who's staying on rent. A lot of your money goes into rent. Some bit on groceries. Saving may be lesser because rent anyway was not liable to GST and you're not going to save much. So it really depends on what your spending pattern is, on what are you spending, where GST saving will be, will it become good. And I think personally, we give too much importance to tax as a factor for deciding what life is. I don't think tax and tax rate would be really the most decisive factor. In which case, middle of nowhere, 0% tax, would you take that versus...
people often see it in isolation, right? I mean, they, like as if national security doesn't matter. As
Correct.
if some sort of these civilizational, cultural issues don't matter. Right? And
exactly.
that, it is ceteris paribus, everything is equal, you're living the same life everywhere, and it's only a matter of taxes, and based on those taxes, I'll live in, whether Koramangala or some part of, some other country, Dubai or the US or wherever, right? I mean,
Well said.
if that was the case, I mean, we would all move to Cayman or, one of those islands,
Exactly.
right? So,
exactly.
What is some of the other things that social media often gets wrong, because tax is like a huge outrage and you have like humongous patience to like deal with this on Twitter and X, right? I mean, you put out these really informative threads and so on.
While my entire career is built on tax, I don't think tax is that important in life, that important for decision making.
Right.
Beyond a point, tax is really a consequence of economic activity.
Right.
And, it's just we give too much importance at times for the tax rate.
So speaking about tweets and posts, you had this post out recently. I'm just going to read a couple of lines. Maybe you can expand on that. I thought it was really interesting. You said, unpopular opinion, we are not ready for a single rate. We cannot have a regressive structure, which we discussed earlier. Poorer households spend a higher share of income on consumption and their goods need to be at a lower rate, right? And you go on to talk about a few of these things. About the base expanding and so on. You want to elaborate that?
So I'll tell you what the point I was trying to make there is, can we today have a single rate GST? To say it's simple. So whether it's 14, 15, 16, it doesn't matter. Can we have a single rate?
Yeah.
The point is, the tax policy, in my view, for a country has to be dependent on where the country and its economy and its people are at that point of time. We cannot borrow tax ideas from other jurisdictions blindly. You cannot say, like I said a while earlier, UAE has 5% single rate taxation and Singapore has something else. And therefore that's simple to implement and we take it. There's always a trade-off between simplicity and what is needed at that point. Right now on GST, I don't think we are at a stage we can say we will collect 15% tax on everything or 18% tax on everything, because we still have a section of society, take healthcare, the number of life-saving drugs, medical equipment, thermometers, etc., on which tax has been reduced.
Yeah.
We cannot have those at 10-15% tax today. The people who consume, people who need it the most are at lower end of the income. Our per capita is low. So we still need a lot of those goods to be taxed at that rate. And because, like I said a while earlier, we are dependent a lot on indirect taxes. Indirect taxes by nature tend to be regressive. And I will tell you what a regressive and a progressive tax system is. A progressive tax system is where you pay tax based on your earnings, based on your ability to pay, which is like the slabs in income tax. So you're earning 20 lakh rupees, you pay 30% tax. If you're earning 1 crore rupees, you pay 40% tax because you can pay more. But up to 5 or 8 or 10 or whatever that number may be, I will exempt you from tax because you are earning just what you need for sustenance. I won't take taxes from you. Indirect taxes don't work that way. You and I go buy something in Shopper Stop, in West Side, in Food World. They won't ask you how much are you earning. What's your income? Based on that, I will charge you. You are charged the GST that is applicable.
Right.
So today, are we at that stage where that can be done and therefore everything can be at that median rate of 10, 12, 13, which gets us the amount of money? I don't think so.
Right.
Therefore, we need to have a lot of goods set at 5%, 0%. The moment you do that, to compensate for that revenue, there will be something that will be at the higher rate.
So we're not headed to a single rate
I think
anytime.
It depends on how we do as a country.
Right.
I wish at some point I'll take these decisions. But sitting where I'm sitting, I would say that until we get to income levels where we can sort of, AC is not a luxury and therefore you don't need to tax it at a different rate and so on. I think it'll all, that's the time when we could possibly end up. The other thing is our base has to expand. The more income taxpayers get in, the more income tax is paid and that collection expands there. Then the government has the ability to reduce the indirect taxes. So a few months back, there was this outrage about a Pani Puri seller getting an income tax notice. And I had tweeted again a very unpopular thing. I had got taken to the cleaners at that point as well. So say if a Pani Puri payer at earning 40 lakh rupees was the thing at that point, and if he is asked to pay income tax, I don't think there should be outrage.
Yeah.
The moment you get more of 40 lakh rupee Pani Puri payers and vendors who are today not paying income tax, get them to get into the income tax net, is when the government will have the ability to bring the 18% down to 15%.
Correct.
Because even with the same collection, you can bring that down. So the base expansion is something that has to happen. It is terrible for a country like ours with the amount of wealth and incomes that you see around, even though we are a poor country, that a single digit percentage of us even file income tax returns.
The problem also is, right, at India scale and complexity, which I keep harping on, right? I mean, even the nuances, right, the margin will be like at the least a few million people.
Correct.
At least. Right?
Always. Yes.
So, yeah, I mean, I think it requires quite a bit of introspection to really understand what's happening. Right. So essentially, I mean, you're going to see more tweaks ahead?
I think we will see some changes on the administration. I don't think we will see too many changes on the rate side. Right. I think we've done a great job, in my view. We are set for a few years. I don't think there'll be too much tinkering on the rates moving around,
right,
etc. Because we've moved most of it essential to 5, rest of it is at 18. There's only a handful at 40. What else will we do?
Right.
I don't think they will do anything significant on the rates.
Right.
It would be more on procedural thing, filings, ease of business, ease of compliance. There will be tweaks on those. There should be. I hope there is.
Okay, fantastic. Thank you so much, Ajay. This was a wide-ranging discussion on everything GST 2.0. People find taxation boring, but you've made it fun. I highly encourage everyone to go check out Ajay's threads on X. He, as I said, he has a lot of patience to explain things to people. Right. So thank you again for being on Bharat Varta, and hopefully we catch up again.
Thank you. It was a pleasure. Thank you so much.